Hello, this is Troy Eckard. I'm the CEO and manager of Eckard Enterprises out of Allen, Texas. And I know that many of you look at videos and you listen to podcasts and various information from experts and those that are considering themselves to be influencers on various social medias. What I would like to do, though, is I'd like to tell you a little bit from what I consider to be the front line of the economy. My business has been for 35 years working with high net worth investors across the United States. I deal with those that have high net worths. They employ thousands of employees, and these are individuals who are either self-made entrepreneurs or self-made millionaires who have, for the last 3.5 decades since I've been in my business, have taught me a great deal about the economy and where things are going. And in my opinion, they're the leading edge or the indicators of where we might be looking for as far as future economic impact. What I've noticed in the last 4 months since the COVID-19 has really been a global impact is that many of our investors are simply taking a passive position to looking at anything long term. When it comes to deciding on whether or not the economy is in deflation or inflation, that is still an uncertain topic. They still haven't quite made their minds up what we're looking at long term. The one thing I'm hearing and the one thing I'm seeing in my own business is that we do have a strong deflationary pattern at this point in time, and that simply means people are being a little more hesitant. They're delaying their purchases. They're deciding that they will postpone significant major acquisitions. And they may even be cutting back on the basics, such as travel, vacation, groceries, appliances, items otherwise they might just go out and purchase on a whim on a weekend and say, you know what, I need a new refrigerator or a washer or dryer. When you start taking a 20 to 40 million scoop out of the unemployment or adding to the unemployment, and you start taking a large volume of consumers and putting them on a diet, which means a fixed income based on unemployment wages or reduction in their wages from a lack of opportunity, you're automatically going to see a drop in demand for consumer items. Restaurants, gasoline usage, utility bills, they're going to watch those expenses very carefully. Well, the business that I'm in is I'm in the energy business. And what I do is I watch and monitor oil and gas supply. I watch and monitor oil and gas exploration. And I look at what the economy is doing because it's directly going to affect the consumption of oil and gas and energy use in the United States. So between the actual clients that I work for and that I work with who are giving me feedback from their manufacturing plants, their law practice, their banking business, their different elements of the industry that they're involved in, and I gather that data every single day in my conversation with my partners. I couple that with what I see happening in the energy space based on supply and demand and commodity prices, and I start to really ascertain where we're headed. I'm going to give you my 2 cents worth, and again, I'm like every other expert out there. You're going to take it with a grain of salt. You're going to agree to disagree. I'll get 45 comments based on this video. But it really doesn't matter, because what matters is I'm giving you a frontline, real perspective with enormous amount of input from those that are on the front line saying, here's what we see. It doesn't matter what's reported in the New York Times or the Wall Street Journal. What matters is what are the people engaged in hand-to-hand economic combat telling me. And here's what I see going to happen. It looks like we're definitely going to see some short-term deflation, probably the next 12 to 24 months. People are going to be very nervous about a repeat of COVID-19. They're worried about a reoccurrence. They still haven't quite figured out what's going to happen in the election in November. Everybody is still very up in arms about this continual racism and riot issues that are taking place across the country. And when there's chaos, people become paralyzed. They stop. They stop doing what they're doing. They delay decisions. They take a protective position. When I was a kid, we used to go to haunted houses, and the girls would always love to take the guy in front and shove him into the next room and let him figure out where the arms are they're going to grab you. They wanted that particular individual to lead the pack. Well, right now, nobody wants to be in the front. Everybody wants to stay close to the wall. They don't know where the trap door is. They don't know where the exit is, and they sure don't know what kind of chaos is in the next room. So the best thing you can do is simply stay put. So we're seeing a complete paralysis across the investment spectrum. This morning I read there's close to $5 trillion in money markets sitting there just waiting with bated breath to be let loose. The stock market is doing well. Why? Because many of us didn't sell our stock. Many of us who did sell stock are reinvesting because we believe it's one of the only places you can get excellent investments on a short-term basis, and you can have the control of liquidity getting in and out as you see the market shifts. The stock market is essentially just a really steroid-driven game of blackjack. You're in and out, and you bet what you want, and you come and go as you feel. When you look at the economy as a whole, and what I'm hearing from our partners, our investors, our on the front line type of individuals, what I'm hearing is there's delays in orders. I'm hearing that the stimulus money is running out, and many are going to start letting go employees if they don't see their business improve by the end of this month, which is only a week and a half away. We're going to see higher increased unemployment numbers, I believe, in July and August and September is when companies realize I used up that stimulus money and now I have to really survive on true business. Even if they extend the stimulus money and they give more capital out of the Fed, the fact is that's just a Band-Aid on a heart attack. It's not really what's going to happen. If we don't see an increase in demand and a confidence level in the consumer, this is going to be a prolonged deflationary pattern. But on the backside of that deflation has to be a super strong undertow of inflation. And when you start thinking about it, I bought a brisket about 6 weeks ago. That brisket cost me $54. That was insane. But it was only one of 4 briskets that were sitting inside that grocery store's meat counter. When I start looking at oil and gas, the business that I'm in, I can clearly tell you the news and the media and the facts that are coming out about the train wreck called the U.S. oil and gas space and what that damage has done is clearly sending a very, very clear message to those of us that are looking at the carnage and assessing the wreck. The wreck is as follows. We dropped production from almost 13 million barrels a day to 10.8 million barrels a day. We have a further continuation of a drop in oil once these operators push out their flush production. We have $300 billion lost in the last 6 years in the oil and gas space. Loans, debt, equity, eroded, gone, money, history. There's not going to be a replacement. The capital withdrawal is not only a withdrawal, it's a full-fledged retreat. People are running the opposite way with money. Banks are selling off portfolios at deep discounts. Many lenders in private equity are saying, we're done. We're out of here for 3, 4, 5 years. When that all takes place, what you're going to see is exactly what you've seen take place the last 60 days. Oil has moved almost $80 a barrel from a low of negative 37 back to a price of $40 a barrel. That is an $80 move in crude oil prices in less than 60 days. And what it clearly sends a message is that regardless of the economy, regardless of how many people are unemployed, oil is the mainstay of energy in the United States, and it will directly affect a rebound in the economy, directly affect every consumer in the economy, and directly affect whether or not we're in inflation and deflation. And demand may take a while to come back, and demand may be suppressed as a result of all kinds of things such as a COVID repeat. But the reality of it is no one's going to turn off their electricity, no one's going to stop buying groceries, and no one's going to stop using utilities. What's going to happen is it may be modified, it may be reduced, but it will regain the demand to a great degree of what we had prior to March the 1st. With that being said, what I'm seeing in the next 24 to 36 months is I'm seeing not a V-shape, I'm seeing an extended U-shaped recovery in the demand, and I'm also seeing that you're going to have some real underpinnings of inflation between agricultural, meat products, commodities such as oranges and milk and other types of tradable commodities, and you're really going to see a massive increase in energy costs because I do believe that oil prices will increase somewhere north of $65 to $75 a barrel by the end of 2023. You can't help it. There's not going to be any money to drill new wells. Our production decline curves come down every single day. There's less oil being produced than we had yesterday. And when that all takes place, no matter what your demand does, the supply is going to outpace demand as far as recovery, and so therefore you're going to see a price increase in commodities. Now, I want to wrap up with this final statement. Many experts give a lot of advice. If you really look through their advice, what you're going to find is they were wrong 6 months ago, 24 months ago, and 36 months ago. They're great morticians. They tell you how the person died. They tell you what it looks like from a mortician's perspective. Very few can give you forward-looking fact-based information that tells you here's where we're going to go. I can tell you, I can assure you, without any doubt, I'm looking very carefully every day at the numbers between consumption, demand, energy, consumer-based products, the unemployment. And what I've come to the conclusion, mostly from the couple of hundred high net worth investors that I manage every day and their feedback about their lives, their spending habits, and their business, we have a U-shaped recovery. We have a V-shaped rise in inflation coming in 24 to 36 months, and today is the day you should start planning for it. I'm Troy Eckard. I'm the CEO of Eckard Enterprises. I hope this information is helpful. Take it with what it's worth. Look for yourself, research yourself, but you'll probably come up to the same conclusion. If you look just below the layer of the media's nonsense, you'll find the facts are right in front of you. Today is the day to prepare. We are looking at inflation in 36 months. Thank you.